Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on GameStop, ticker symbol GME. Let's get to it. All right, so for today's agenda on GameStop, we're going to go over 2021 Q1 results. We're going to look at the stock price history, the fundamentals and the financials. We're going to look at shares outstanding, a price target for GameStop, as well as my final thoughts. As a public service announcement, please hit that thumbs up button. It helps out all the lonely thumbs up buttons down below. So just again, please hit that thumbs up button, helps me out a lot. Now back to the content. All right, so 2021 Q1 earnings are just released. Let's look at the results. So they reported a diluted earnings per share of negative $1.01. The analyst estimated negative 83 cents, so they missed that by about 18 cents or about a 21% miss on diluted earnings per share. On the revenue side, they beat that by 117 million. The revenue came in at $1.27 billion, and the analyst expectation was $1.16 billion. All right, so moving into the press release, we have a couple different things I want to talk about. I'm going to go over net sales growth here in a second, but I think the real highlight in all of this and what I believe most people are going to gravitate to is the appointment of the new CEO and CFO. They're both ex-Amazon employees, and this is really what people have been talking about of transforming GameStop from just a gaming company into a technology company. And the appointment of these folks into leadership positions is definitely a step in that direction. So I think people are going to see this as a positive. If we look at the net sales growth here of 25% up to 1.3 billion, you can see down here that's compared to 1.02 billion in 2020. The thing that reduction in companies global store, so they lost 12% of their store base. I think one thing you have to remember here is that if we go back to 2019, they actually had $1.5 billion in revenue. It dropped to $1 billion, and now they're back at, if you go to this press release, $1.277 billion. So it's still a decline if you compare it back to the May of 2019. Another thing that's concerning here is the gross margin decline to 25.9. Looking at gross margin here, it was 21% for the previous quarter, which is really bad. But if you look at the other quarters, it's sitting there at that 27, held at 27 for quite substantially. So it's about 1.5% change there. So don't like seeing that. A couple more things I wanted to point out was under capital structure and liquidity. They increased their amount of liquidity here about by $200 million. That's good year over year. The company had no borrowings under its assets-based revolving credit facility and no long-term debt. Great to see that, especially for GameStop. Another thing GameStop is planning to do is to offer, at least have the ability to sell up to 5 million shares of common stock. They're filed for that approval with the SEC, so more information on that to come. They have, again, in here, they talk about bringing on the new CEO and CFO. And again, the thing they brought in here is technology experience. I think people are really going to focus in on that piece. If we look at the 2021 outlook, they have continued to suspend their guidance, but they did provide positive information for 2020 May 2021 sales, so up 27%, and that's kind of in line with first quarter being up 25.1% of sales as well. So good there for them. Good job, GME. All right, before we get started, please hit that thumbs up button. Helps me out a ton, so smash it. Wow, what a wild ride GameStop has had over the last year. So if we go, they actually traded at $300 today. At one point, they're at $339, which means they're up 21% on the day. They closed 17.14% up for the day. We zoom this out to the 6-month time frame. We can see that they've had quite a bit of a roller coaster since the beginning of the year. So January 1st, they're trading about $18 a share, $17 a share. Went all the way up within the month to $350, dropped back down into the $40 range, went back up to $250, and then they've been trading in like the 150s for the last couple months, and then now they're starting to uptrend again, and they hit $300 again today. But this time it's different than the last time they went to 300. Last time it was up and down. There was also some interference here with some brokerages such as Robinhood. I think actually it wasn't just Robinhood. There were definitely several brokerages that halted trading. Buying specifically, you could sell, but you could not buy GameStop. So that's kind of why they believe that this stock dropped. Kind of the hype was died down right here. There was a lot of what happened, why did they halt trading, all that good stuff. And then there was this big buy again. And then it just kind of traded sideways for a little while, actually a lot higher than what you would have anticipated, at least from an analyst perspective. And now it's back on this rise. So for the last 2 weeks, it's up quite substantially, 69%. And earnings is going to be very impactful on it tomorrow. So we'll see what happens. If we bring that out to the 1 year, we can see that just, it's been doing nothing for quite a while. 5 years, it's traded about $27 and just been going down and down and down and down. So if you got it back here, you're substantially losing money. So if you bought it at $30 back here, you're down, oops, didn't do it right. You're down 86%. But if you bought it here and ended up here, you were up 7,400% within a month. So it just absolutely crazy. This name has been absolutely wild. This price action, you just got to keep. It's definitely entertaining, that's for sure. All right, so diving into the financials for GameStop. Let's look at the revenue between the end of fiscal year 2016 for them and fiscal year 2020, which ended in January of 2021. So please keep that in mind. So when fiscal year 2016 ended, they were making $9.3 billion. The next year, they were down 14.9%. They gained 7.31 up to 8.5 billion. Lost 3.6 down to 8.2 billion. Then they're down 20% in 2019. So fiscal year 2019, they're down to 6.4 billion. And then in fiscal year 2020, they've made $5.09 billion. Gross profit, I really just pay attention to the margin here. You can see that the margins at GameStop have definitely been declining. This is not a good thing. This means you have to make more revenue to make the same, to continue to keep making it down to your bottom line. So you started off at 31%, then 31.39, then 29, 27, 29, 24 in the last year, fiscal year 2020. Moving down to net income, you see this has slowly been declining for fiscal year 2018. You can see that they lost quite a bit on the net income side, and they've been able to kind of pare those losses over the last several years, over fiscal year 19 and 2020. All right, so moving on to debt, let's move on to the balance sheet. We can look at their assets and their long-term liabilities, short-term liabilities. So cash and cash equivalents, $509 million. Let's go down here into current liabilities, $1.34 billion. So they still have about $800 million they need to figure out how they're going to raise in order to pay that off. I don't think they're going to have the money from cash from operations in order to cover that. But we'll need to look at that. If we look at accounts payable, that's been, it's fairly stable. So yeah, they're gonna have to figure out a way to pay for that in the next year. And then their long-term debt, this is actually long-term debt is $2 billion. Total assets 2.4, so they have more assets than total liabilities. That's positive. I like seeing that. I also like seeing that they've been reducing their long-term debt here as well. So good check marks there for GameStop. I like seeing that, and their total liabilities in the last several years has been decreasing. Good for them. Their assets have also been decreasing as well. So not such of a positive there. All right, so moving on, let's look at the statement of cash flows. We're going to look at free cash flow here. So that's cash from operations minus capital expenditures. So we have $124 million for the fiscal year of 2020, and minus $60 million in CapEx. And so that gives us $64 million in free cash flow. If we do some quick math, they have a market cap of $2.8 billion. You can see it right here. Hopefully you can. So we have $2.8 billion over 64 million, and that gives us a price to free cash flow of 325 times free cash flow. Next up, I want to address how many shares GME has outstanding. So we're going to go up here, click on shares outstanding. I'm going to open this graph, and we're going to take a look at it. So this is good to see, actually. So in December of 2019, they paid off quite a bit of their shares outstanding from $102 million in July of, so actually 2 years ago, almost nearly 2 years ago now. They paid off quite a lot, from 102 down to 64, so about 40% of their shares outstanding, 35% of their shares outstanding. So that was great for shareholders back then. But since then, their shares outstanding has grown about, let's see, I'm not great at quick math, so it's 10 over 64, about 15.5%. So there's been a little bit of dilution if you entered this position in the last year and a half. Otherwise, if you entered this position years ago, you've actually, considered from a dilution perspective, you're actually better off now. You're better off if you entered the position 2.5 years ago, just because there's a heck of a lot less shares outstanding. So about 26% shares less if you got it 2 years ago. All right, so I just had to throw up this price target that they have up here. So these are analysts, and if you're looking at this, it says that there's a negative 91% return potential for the next year. If we look at just trailing 1 year return, that's at 5,800, almost 5,900. So it's a 59 bagger if you bought it a year ago exactly today. So if you did it, you're super happy, and this price target is a joke to you. And honestly, the fundamental analysis doesn't support the price for this, and there's no way an analyst can, really give a true price target for this based off of the technicals as well as the momentum here. This is really a big momentum play, big technical analysis here. You really need to be staying up on the trends if you are trading this stock. I personally wouldn't short, or I'm not personally trading GME, but if you are doing this, definitely involve yourself into a short-term trades. Personally, I wouldn't hold for very long, especially if you're dealing in considerable amounts of money. You wouldn't want to be up here and then have to go down here and have to hold it for several months to get back to your cost basis. And personally, I wouldn't want to cut losses on this stuff. So, if you are trading with GameStop, you really got to be quick. If we look at just today's price swing, if you bought it at the beginning of the trading period or even the day before, hopefully you sold it early, and then you bought it back again and sold it again and bought back and sold again. Like, I mean, there's so many different price swings here. You can make good, decent amounts of swings. So even here, there's a 6%. From here, you got yourself a good 18% gain. So there's lots of trades here that are have potential to give yourself several percentage points throughout the day. You have to be very quick, put your stop losses in, just because, for example, if you bought it up here, you could have lost yourself. You could have lost yourself, a good 16, 17%. So, maybe you stop yourself at, a 3-4% loss, and you just let it go, and you come back in, right? And then you have to make that loss back up. But I wouldn't want to take a 17% loss on a name within a few hours. So just be careful here. Honestly, if I was trading this stock, I probably would have sold at the first 5% gain, and then continued and repeated that process over and over again. Especially if you're dealing with larger amounts of money, you just buy it, get a few percentage points, sell it, repeat, rinse and repeat. So I think that's a good strategy you could employ with GameStop. But if you're doing a long-term buy and hold strategy, just the long-term chart just shows this is an anomaly. I think when all this is said and done, could take a very, very long time for this to be done with, but it will definitely be a big spike in the chart. So, and it's already a big spike in the chart. Could even be a bigger spike from now. So we think this is high. This could just be a blimp like this down here. But we'll see. We'll see what happens with GameStop. We'll have to keep monitoring this one. Thank you so much for watching today's video. Please hit that thumbs up button, subscribe. Thank you so much for watching. Frank Finance, out.